All right. And then also actually share screen. Let's do that, huh? And Steve, when you start, you can go ahead and take hold of the screen if you need to, if you have any presentations or anything like that.
Actually, it's going to be Alex that will be doing it. So she'll,
okay.
Yep. So she's running through everything with and for you guys.
Sweet. Awesome. Okay. So first up, just going over what's going on, I guess, this week and next week. We have 2 weeks worth of items available. So tomorrow we have Tanya is going to be continuing some of the new updates that have been occurring in Command since Mega Camp. She's going to be going over client save searches, as well as tomorrow. After that, we will have the CE credit sponsored by Fidelity National Title. That will be Advanced 1031 and year-end planning. That's a good one to go into, especially coming into the end of the year. Next week, we do have Ignite starting, or the third session of Ignite will be with Jenny Hill. She'll be talking about marketing your value. So if you have been going to Ignite, keep coming. If you are interested in joining into Ignite, you can definitely let us know. We'll get you. We have a binder full of material that we can get you, so you can get the full experience. We've been getting a really good reception towards the speakers and the material. If you're a new agent, it's a great opportunity, or if you are an existing agent and want to jump in, it's definitely worth your time. We also have next Tuesday, we're going to have Mike Larson on. He's been a CPA for 35 plus years. He'll be talking about kind of the changes that are occurring coming into this next tax season, which is very useful for especially agents, seeing that taxes are a weird thing that changes every single year. So getting that update and getting that information will be crucial coming into this. Do you have anything to add to that? Okay, perfect. And then also next Wednesday, Tanya will have her all going over designs and what they've changed in designs and how you can implement that into your campaigns. And then big thing next week is the LARC class. That'll be that 3-hour credit that's required for all agents before they renew their license. So definitely come to that. Kim Wilder will be giving me the information probably today or tomorrow. So hopefully I'll be getting that information out so you all know exactly what's happening. It will be in person and on Zoom. And I believe she's working on getting all Keller Williams offices in the area onto Zoom, but we're the only one that she's going to have in person. So definitely take advantage of that. And so, yeah, so then moving on, just have information from last month's cappers. I know we're like in the middle of the month and usually data takes a little while to get in, but congratulations to Nicolette, John, Heather, Janet, Regina, Chris, and Alex. That's really exciting. They've capped this month. And then I think we have a handful that we already know are capping this month. So that's exciting. And then again, with Ignite, here's the full overview. So Jenny's happening next week, and then we have Dwight the week after that. And then it continues on throughout the entire fall into December. Then we'll take a couple week break and kind of reignite it. Oh my goodness. There we go. Then last but not least, we do have Bold Pivot starting next week on the 20th. This happens on I'd say like a quarter schedule, perhaps. It's kind of their new Bold event that's happening with everything changing. They call it Bold Pivot. It's an online only live stream. It usually is like a big event that's $700-800, but it's just $99 with everything here. So I will actually be posting this on the Facebook page, and I'll probably send out an email about it and our website. But just a quick, let's see, let me stop sharing real quick to make sure that I put the right one. There we go. So if you go to the website, if you just Google, you can Google Bold Pivot KW. It's the first link. That's where you can sign up here. Has all the information. You can look at the full agenda here, and it will give you everything that's going on for those weeks. I'll also be posting those actually into the quick glance so that everybody can get an idea of what's happening. But yeah, that's about it for me. I actually did have, where are you, Morgan? Are you here? Okay. I did have Morgan, I asked Morgan to come on to give some information if she has any to kind of just give people an update on her marketing and what she's working on and kind of again, she's here at the office almost every day, and she's doing free consultations. So Morgan, you can take it away if you want.
Thank you, Austin. So if you haven't heard yet or met me, my name is Morgan, and I'm sort of a in-house marketing guru. Everything from marketing and command. I'm familiar with the command systems to Instagram, Facebook, different things like that. So I wanted to briefly go over a win that I shared in the Facebook page last week if you haven't seen it. So let me go ahead and share my screen here. Okay, so if you did not see it, I helped an agent schedule out all of October their social media posts for Facebook and Instagram. In less than a week, they got 71 new likes on their Facebook page. That's 71 new people that are going to see information from them a couple times a week. We have posts scheduled for 5 days a week with her. And I had a couple examples. So we made a just close. She let me know, hey, these people are going to close any day now. We had a delay. Can you just make up a cute little graphic for me and I'll post it as soon as it closes? Can you send me a caption? So she had it in an email ready from me. And as soon as they closed, she went and posted it super quick. Everything else I've pre-scheduled. She doesn't have to worry about it. Another one was soup recipes for autumn. I don't know about you guys, but when it's rainy and cold, I love soup, especially if it has potatoes. So if anyone has leftovers, feel free to drop it by my office. Family fun at home. Fall is a little different this year for a lot of people. So came up with some ideas like making a soup with the kids, picking up knitting if your kids wanted to make a scarf, or making a homemade Halloween costume, going to the park, just you guys as a family to fly a kite when it's nice and windy. So we came up with all these ideas like this and pumpkin carving ideas. So what it looked like when we first started this was I sent her this. It laid out the posts for the whole month. I make 3 of them a week for her, and she does the other 2, as you can see here. She does a personal post, and then she does a quick market update on Friday. Everything else I pre-scheduled and wrote up for her. She got the images in advance to approve in case she didn't like anything I did, or maybe wanted to change the colors on something. I also sent her the captions for it so she could edit it if she didn't think it sounded like her, or she said, you know what, that charity that's on there, can we switch it out with this one? I love donating to this charity instead, or whatever it was. So we had this great communication, and we got this all scheduled for her. So it was a great win for her to get more people on her Facebook page, and even her Instagram is slowly growing as well with the use of some hashtags and promoting her Instagram to her friends and family. So this was a huge win for me. I would love to help anybody else with this. If you are struggling coming up with things to post weekly, or maybe you just don't have the time and you would love someone else to take it over for you, I would love to chat with you about it. I have a bunch of other services I offer too. So if anybody would like to ask any questions, feel free, but I wanted to share that with all you guys.
All right, perfect. Thank you, Morgan. I appreciate it. All right, so now we're going to transition over to Alex and Steve. And is it Alex or Alexandra do you go by?
Alex is fine.
Okay, perfect. I think I heard someone say Alex. I think Dwight said Alex. I was like, okay. No, but so Dwight, has an amazing amount of resources and connections. And so Dwight was the one that asked these fine people to jump on and help you guys get some information just on, health insurance and what's happening, with the market, and kind of what to expect coming into the coming weeks with, the open enrollment and things like that. So if you have any questions, they'll probably have a time at the end, and you guys can set up the parameters of what you'd like with, questions and intermittent, but go ahead, take it away.
Hey, could I interrupt for 1 second, Alex? I'm sorry, can I interrupt you? Okay, would you make sure you give an idea of how long you guys have been in business doing this? So I appreciate that. that your father and you have collectively many, many, many years of watching what's happening with health insurance. I think it gives our agents a really good perspective about the background and the content that you're going to share. So thank you. Appreciate it.
Yeah, thank you. I mean, Steve has a lot more years of experience than me, but obviously we all work as a team here. Peggy Planton is also a benefits account manager here. She's not on the call, but she's here to answer any and all questions. She's fantastic. So she's been with us for years and years, and yeah, she's great too. So let me share my screen for you all. Okay. So we obviously thank you for giving us this opportunity to make sure that you guys have good information when you're navigating your benefits for this upcoming year. We want to just, give you as much information as possible and have you look at a few different options, see kind of where you want to go. So a quick disclaimer, obviously this presentation is just, informational purposes only. Be aware that every carrier is going to offer different networks and different plans, obviously with different premiums. So open enrollment, this is the period in which you have the opportunity to change coverage, enroll, modify, what have you. So that period is November 1st through December 15th. There are exceptions to this rule. You'll see below a list of some of those exceptions. If you miss the enrollment period and one of those exceptions applies to you, you have the opportunity to make those changes. But, most important is November 1st to December 15th. That's your period to enroll. So here you'll see a table of, these are all of the big players in Oregon, all of the major carriers for individual healthcare. You'll see on the right side over here is the overall rate increase, pretty neutral across the board for rate changes. Just something to be aware of here. If you are choosing Regents and you see the 2.5 rate increase, it might change a little bit depending on which plan you choose. And then down here, through the Oregon Association of Realtors, they offer a Providence Health Plan for small group. If you're a member and you're interested, we listed the contact information below. So just in case you're curious about that, it's just for Providence, and they'll be able to give you some more information. So here are the carriers again, you'll see on the left side. And then what I want to show you here is the providers that are offered. These are only for the 3 major counties, Washington, Clackamas, and Multnomah. That's just kind of what I wanted to highlight here is you'll see that if you want an OHSU provider or a legacy provider, then your carrier options are limited to, say, Regents or Pacific Source or Moda. If you only want a Providence provider, obviously the carrier that you choose is going to be Providence. So the reason why understanding the network, I really want to highlight network here. It's really important because carriers are not all inclusive to network or to providers and networks. So for instance, I put up a Providence kind of example here. You'll see the counties that are offered, which network it is, and your plan options. I really want to kind of highlight here is you be aware when you're choosing your network that your county is in it, as well as the plan you want to choose. So be aware that once you choose, you cannot go back and change. We've had a few instances like this in the past. it's you know, one and done. You choose your network, you choose your plan. So really consult with your broker. If you want a certain provider, make sure they're in the network that you choose.
The reason why it's so important is Alex is showing that Providence, you can see on the in the middle highlighted in red, they have a connect, and then below that they have a choice. So even within Providence, it's not all of the Providence doctors or physicians or hospitals. The connect has a different set of providers than the choice. So be very careful on picking your providers in the plan that you're going with, because all the individual plans, you have to stay in network in order to gain any coverage.
Yeah, and just a quick highlight is, you know, a lot of, if you've got a child that's in college at Oregon State or University of Oregon, you'll see that those counties are sometimes included with the other major ones. Just something to note when you are picking your benefits as well. Okay, so here are just some things to consider that we want to put up here. You know, first and foremost, the rates were pretty neutral, like I said on the previous slide. You didn't see a lot of big changes, which kind of just leads me into, if you're happy with your provider and your carrier, you probably don't need to shop around. You probably don't need to change that because of the rates, and if you like where you're at right now. If you are going to shop around or modify anything, you know, the first thing to ask is, what provider do you want access to? Do you want an OHSU? What are your options for carriers? Do you want a legacy? What are your options for carriers? So that's kind of the first question you want to ask yourself, is where you want to fall with your provider, and then you can look at your carrier options. Do you live out of state for a period of time? If you live out of state for a 6-month period or a few months, note that Oregon carriers for individual health care, the only coverage you have out of state is emergency room coverage. You do not have coverage out of state. So our suggestion is to check with the state that you live in, the other state that you live in for that period of time. See what plans they offer, see what they can accommodate for you, because you will not have coverage from your Oregon plan transferring out of state. Same thing if you have kids that are 26 or younger on your plan, you know, say they go to college out of state, they only have emergency room coverage. So also check with that state that they might be at college, or where they're living if they're under 26, what plans that state offers for them. And then how often, oh, go ahead.
The reason why that's important is, like Alex was saying, is Oregon plans, Oregon individual plans, pretty much only cover you in the state of Oregon, and emergency room out of the state. However, other states do different things. So for example, Florida, under their Regents plan in Florida, you get the national blue card, and that gives you coverage in all of the states, not just the state of Florida. So depending on where you reside part of the time, it's a good idea to just check there to see what your options are compared to maybe just buying it from Oregon, if you will.
Yeah, thank you. And then, like we said, you know, how often are you using your plan? Are you a heavy user? Do you barely use it? So that's just kind of something to take into consideration when you're looking at your premiums and your deductibles. Might make more sense to pay more in premium if you're a heavy user and have a lower deductible, than pay less in premium and have a higher deductible. Those are things to consider, as well as your co-pays, which kind of leads me into prescriptions. Lots of plans have different formularies for prescription co-pays and what the tiers are for that. Preferred versus generic. So you'll kind of see that when comparing your plans. And then not all family members need to be on the same plan. So keep in mind, if you have, your spouse is on your plan and they are a more heavy user than you are, it might make more sense cost-wise to not have everybody on one plan, or obviously if you've got that child that's out of state, they're not able to be on your plan, you're gonna have multiple individual plans. Here are some terms that you should know, obviously applicable to in-network. You know, these are just important things to note when you're choosing your benefits coverage, what everything means on that plan sheet. It can get a little overwhelming on the Excel spreadsheet when you're looking at everything. But something that I want to highlight here is the out-of-pocket maximum. Oops, go back. Your out-of-pocket maximum. So like we said on the previous slide, it might make more sense to pay more in premium if you're a heavy user of your plan, lower out-of-pocket maximums, lower deductibles. You'll see that the out-of-pocket maximum limit for 2021 is $8,550 for an individual, and then $17,100 for a family plan. So take that into consideration when you are, asking yourself how often you use the plan. And then your network is another one I want to highlight. You are either going to be in network or out of network, depending on what plan you have. So it's your responsibility to know if the provider that you are using is in your network. It'll be extremely costly if you fall out of network when visiting a provider that you might have been referred to from your primary care physician.
And like Alex, going back to, hey Alex, just go back 1 second.
Yeah.
In regards to the out-of-pocket maximum, that's the maximum for 2021 that a plan can have. Like she's saying is that if you are a heavy user and or you are anticipating a surgery coming up in the 2021 year, then you might want to purchase a plan that's a little bit more expensive monthly, but might only have a $5,000 or a $6,000 maximum out of pocket, which by the time you tally up your premium plus your expenses might be less expensive for you.
Yeah. And then just here, you'll see the continuation of, what an in-network versus out-of-network is. Just really reiterating here, making sure that all the providers you see, the hospitals, the clinics are in your network. And usually, just to say here is a lot of carriers offer a member portal where you'll be able to look up a doctor, make sure they're in network. Very easy and user-friendly when you're looking for, is this physician in my network or not? But it's also your responsibility if you have a referral from your primary care doctor, make sure that referral is in network. And then lastly, just your emergency room visits for in-network and out-of-network. If you are out of network, you're only covered for your emergency room visits. Same with national coverage, or same with going out of state or anywhere else besides Oregon, you're only covered for emergency room visits. So for HSAs, health savings accounts, various carriers offer plans for a health savings account. They're very low percentage of people that purchase this plan due to the fact that you have to satisfy your deductible to trigger coverage. So they're very high deductibles, but you're covered for preventative care. You'll see some of the tax advantages here is you can put money in tax-free. You earn interest tax-free, and when you pull it out, it's tax-free. So it's great if you have cash flow to invest in this and to contribute. You'll see that under the 2021 contribution limits, it's $3,600 for an individual, $7,200 for a family. So those are just things to note. If it's great if you are able to put in the contributions, and then there is a catch-up for people that are 55 and older. you'll see there that you can increase the limits by $1,000 a year.
A lot of individuals are very comfortable with HSAs. The thing to kind of keep in mind, like Alex was saying, is it's a real nice tax advantage and alternative kind of a savings program that you could put money into tax-free. It earns interest tax-free. And even if you come off of an HSA account in a year or two, that money stays in the account that you can use down the road for qualified medical expenses. You can see that, you know, you can contribute up to $3,600 on an individual per year. You don't need to use that money. It can stay in there, $72 for a family. And then there's catch-up provisions as well if you're over 55. So if anybody has any questions on it, you know, feel free to give us a call. But it is a nice way, especially for if you're younger, you're healthy, you don't go to the doctor, you can lower your premium, and then you can stuff some money into the account to kind of save it for later on when you do need it. And there's no limit on what that can accumulate.
Yeah, any questions on that, feel free to ask us. Like Steve said, we've got a lot of good information that kind of dives a little bit deeper into what an HSA entails. Okay, so do not assume, you know, benefits can be extremely complex when you're enrolling. Don't assume that you can't enroll. Don't ever assume that you don't have options. And don't ever assume that every bill you're going to receive is correct. So just always ask questions. We can't reiterate this enough. A lot of people, you know, are always a little unsure when they're going through things. And just if you need any information on it, don't hesitate to ask. And then lastly here, just some ancillaries, some additional coverages to be aware of. Health insurance, we just talked about. Dental, carriers have optional dental plans for individual. The fact of the matter is it's not worth the investment for an individual. It's costly, and you have a few caveats to that, like a waiting period. So it's probably better to pay out of pocket for a dental plan individually. Same with vision. Kind of falls under that. It's not really worth the investment if you're just going to pay out of pocket for an individual. Life insurance, term insurance, any questions you have on that, let us know. Disability, injured on the job, there's coverage for that. Travel insurance, if you go out of state or you're going to go out of the country for a period of time, travel insurance is a broad coverage, easy to purchase. Short-term coverage, if you're in between plans and you need coverage for a period of time, this is a good thing to purchase. Again, broad, easy to get. And then long-term care, this will be for the nursing homes. And also if you have, again, if you have any questions, let us know on that as well. And that's it. If you guys have any questions or, you know, want more, like we said on the HSAs, you know, contact me or Steve. This is my email and our direct line. So happy to kind of share some more information if needed or walk you guys through anything.
I do have a question. So I want to go back, Steve, and talk about a little bit more about what you suggested, which was if we have someone that's younger and they decide on an HSA account, and so they're making the premiums, and then they have a maximum in a year, and so they deposit, was it $3,200 or $3,600?
Mm-hmm.
And let's say that they deposit at year one and there's no health issue. They deposit at year two, there's no health issue. They're paying their premiums. They do their deposit year three, there's no health issue. Now we have about $10,000 in the account. And let's say we go 5 years. And so now we have 16 or 17,000 in the account and it's earning interest. What would happen that would use that up? if you have a maximum in a year of, let's say, $8,500. Can you explain what happens, why you would want that to build up?
Yeah, so the advantages is you know, once you get, we have people that have $40,000, $50,000, $60,000 that have been doing this for a long time for their family. You know, you're going to get to a certain point, but it's really kind of a savings account that once you get into Medicare and or you're not working anymore, where you're not going to be contributing, you can pull it out, you know, after age 65 and use it for expenses. And so there's going to be kind of a tipping point where you're only going to get so much in there, but it is an added, like an IRA. It's a different account, and the list is pretty long in regards to, you can use it for dental, vision, chiropractic care. So you can use it for all sorts of ancillary coverages, but you're right. You might get to a point where you go, hey, I have enough in there. I'm not going to put any more. But usually your expenses, you know, once you turn 50 or 55 or 60, you start getting some expenses, and that's usually where you're going to start to draw it back out.
Can you use it to pay premiums?
You can, yes.
So if you built up 3 or 4 or 5 or 6.
I'm sorry, Dwight. Back up. No, you cannot use it to pay premiums.
Okay. Thank you.
Yeah. But it's not designed for everybody. You want to be, the cautious side of that is, unlike other traditional products, I'm going to call them traditional individual products, where you have an office copay, you have a prescription copay, an urgent care copay. Underneath this type of plan, besides preventative care, you have to be in a position that when you go to the doctor and something happens and you have a $2,000 deductible, you need to satisfy that deductible before it triggers any other coverages, like deductibles or coinsurance or copays. So you want to be in a position where you can afford to do that, and you are putting some money aside to pick up those expenses.
And how hard is it to set up an ancillary account?
Very easy. Most of the carriers do it. Your bank will do it. You don't have to have it with the carrier. You can do it with your bank. And so you can control that. A lot of them will give you a credit card that you can use for expenses. If you take it out and you do not use it for qualified expenses, you are taxed heavily on it. So when you put the money in there, you want to make sure that it's extra money that you want to keep into that account until you need it for those reasons.
Okay, thank you.
You bet.
Anybody else have questions? We tie up.
I have more questions.
Ask away.
Can you speak to disability for realtors while we're on the call?
Yeah, so I'll pick that piece up. So individual disability is pretty, I want to say it's pretty simple to obtain. You do have to fill out health questions and a health questionnaire. So there is kind of a process. It's almost, if you will, like buying life insurance. You'll be based off of how much income you want to protect. It's typically a maximum of 60% of your gross earnings. It is going to be based off of your health, and then the time that you want coverage for. If anybody wants a quote on that, we can go ahead and quote that out. It's pretty easy. There's no obligation to get you kind of a ballpark quote on what that looks like for your particular situation. And it is 24-hour coverage. So no matter what happens, no matter where it happens, it covers you and protects your income if something were to happen to you.
Why would a realtor want that coverage?
Well, as anybody, you know, it's the #1 issue is becoming disabled. And so if a realtor got disabled and could not do their job and they lose their earnings, that's what protects their earnings, as if they cannot do it. So they're in the car, they're driving around, they get in a car accident, they're doing anything on personal time. You know, they can be riding a bicycle, they could be playing with the kids. They could be in a car accident, picks them up for anything that were to happen for an accident or an illness.
Have you ever seen anyone say, part of this disability, well, I'm not sure what that noise is. I'm going to buy enough disability to cover my mortgage payment in case I can't work for 6 months?
Yeah, it's, you know, you can do it through your mortgage company. A lot of mortgage companies, you can put disability on, they'll pick up your payments. So that's usually an inexpensive way to do that if you can have that option. Individual disability plans are typically, you can do it for a 5-year period, a 20-year period to age 65. And you can, it's expensive. Individual disability is expensive. And so a lot of individuals might not, for example, if you're making $7,000, $8,000 a month, you might not be picking up the entire 60% of that. You might only pick up 30 or 40% of that, so you at least have a buffer if something were to happen.
Got it.
I have a question. My name's Alice, and I'm an admin manager for Mike Kaufman, who's a licensed broker, but I am not a licensed assistant. When you were talking about the different individual plan options, the realtor plan, would that not be available to me since I'm not a licensed realtor? Or would I be because I work for a licensed realtor?
I don't know what we tried to get some information on that. They're pretty tight-lipped about it because they've got an exclusive broker on it. So that would be a question. That's why we want to give you the information and the phone number on the slide. So I know they're pretty responsive. If you give them a call, they can give you that information on if you can or can't qualify for that. We also know that in some situations, it's like anything, it's going to be less expensive for some, for sure, compared to going to Providence, and then others, depending on how they rate and the rate band and your age, et cetera, Providence individual plan, not the association plan, might be better for you. So it just depends. It's not a guarantee either way.
Okay, thank you.
Yeah. And if you have questions on it, you know, if you do get information, they send you something. Again, we tried to gain some information from them, but they were pretty tight-lipped about it. But if you do get something, you want somebody to do a once-over on it for you, send it over to us. We're more than happy to kind of walk through it with and for you.
Yeah, so you'll help explain the coverage that might be available through the OAR group plan versus the coverage that might be available through the carriers that you guys represent, right?
Yeah, the coverages are going to be the same. You know, it's going to be, and Alex kind of laid out the points to be thinking about. The deductible, the network, that's very important, is even within Providence, even though it's Providence Network, they have a couple of different plans. So be aware of the network, the maximum out of pocket, and then also the drugs, if you're taking prescriptions, you know, how they fall into that particular plan compared to maybe another plan.
Good.
Yep.
How about, is this a good time to start doing research if people will give you the information, or should we wait until the open enrollment period starts in November?
They can start now. Actually, the rates are being released. And so coming back to Alex's point, if you are in a position where, for example, you're with Legacy and Blue Cross and you took a 2% rate increase, they're pretty consistent over the board. Compared to last year, you're probably not going to make any moves. You're probably just going to leave everything alone. With that being said, if you don't have it or you lost coverage or something is changing, you can start to look now. And you know, one of the things that we do is when we quote it, it automatically spits out the rates for all of these carriers and all of their plans at once. It is not inclusive of the association product just because we don't have access to it. But they would want to start to look now. The enrollment starts November, ends up December 15th. But if they are going to make a change, the sooner they make the change and get into the system, the sooner they'll receive their ID cards and in the system. So when they do go to the doctor January 1st, they're uploaded. And so they have all of their information already there.
Perfect.
Hi, I have a question. Hi guys, it's Melanie. Can you hear me okay?
Yeah, Melanie.
Yes.
Yeah.
I'm on my phone, so I wasn't sure. I just had a quick question. What are there plans available, or what is your recommendation for someone who maybe can't really afford the high monthly premium cost, but needs to have some kind of health coverage? Is it best just to do like one of those catastrophic plans and just know that you're going to have to save for like a high out of pocket, or what's your best suggestion for that?
Yeah, there's also alternatives, through the state of Oregon, which is the Affordable Care Act. So if your particular income is under, it's like 49,000, we don't really do the plans, but just so you know, if you have an individual income, household income of less than $50,000, or a combined household income of less than, I think it's like 95,000, then you can go through the Affordable Care Act plan in the state. The coverage isn't the greatest, so just a little heads up on that, but it's really good coverage, and it's subsidized depending on what your income level is. If you are above that, but you're trying to manage costs, then going back to one of the things that Alex brought up, is the biggest question that you're going to ask yourself as you're going to go down to the line item is, how much of a user are you of the plan? Because if you are pretty healthy and you don't need the plan, then you might want to balance that out between an HSA account and then a regular account with a high out-of-pocket and higher deductibles. But a traditional product like that would have like office copay. So if you do need to go to the doctor, then you'd have just an easy copay, even though it's got a high deductible and a high maximum out-of-pocket.
That's great. Thank you.
Yeah.
Maybe I'll try to jump in.
Any other questions we can answer for you? Well, we thank you very much, Dwight and Austin, for the invite on this. We really appreciate it. You've got our contact information. If anybody has any questions, again, even if you go through the association product and you just have a question on it, we're more than happy to help you out any way we can.
Perfect. Thank you so much. Can you guys hear me?
Yes.
All right.
Okay. Perfect.
Steve,
thank you so much. Appreciate it. And I will be posting this onto the Facebook page as well, so people can look back at the slides, as well as I'll post this contact info into the body of the page as well, so that people can see what's that information and can reach out to you guys. But thank you so much for everyone for joining. But yeah, if you have any questions or need anything from us at the office, reach out to us, and have a great rest of your day.
Thank you, guys.